Fund flow statement, it is a statement prepared in order to find the changes in financial position. The main purpose of preparing fund flow statement is to find the reason for changes in the cash inflows and outflows. To find the changes in working capital, we need to consider the current assets and current liability. Hello everyone. I am Meghana from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. We are in the session 4 of Unit 3, subject Accounting. In our last session, we have discussed about marginal costing and we solved some problems on marginal costing. I hope you all done that homework problem. So let us continue with the new concepts in today's session. The new concept is fund flow statement. In today's session, let us start with the fund flow statement. Fund flow statement is a statement prepared to analyze the reason for changes in the financial position of a company between two balance sheets. Here, fund flow statement, it is a statement prepared in order to find the changes in financial position. So, to know the changes in financial position, fund flow statement is prepared. So, this statement is prepared by considering two balance sheet. So, 2-year balance sheet. Here we compare the previous year and the current year balance sheet in order to know the changes in financial position of the concern. It portrays the inflow and outflow of the funds, that is sources of funds and application of funds for the particular period. Here the cash inflows, fund inflows and outflows. In this statement, in fund flow statement, we consider the cash inflows as well as outflows. So, we consider previous year and current year balance sheet. From this, we calculate the changes in financial position of the concern. So, it helps to analyze the changes, the reason for changes. Next, objectives of fund flow statement. So, first objective, it helps in knowing the changes in the company's financial position. The main objective, the main purpose of preparing fund flow statement is to find the reason for changes in the cash inflows and outflows. So, by comparing the previous year and current year balance sheet, we will get the difference or changes in the cash inflow and outflow. It helps to analyze, it helps to know the reason for changes in the fund flow statement, whether it may increase or decrease. So, what is the reason for increase or reason for decreasing in fund flow statement? Next, analyze the operational position of the company. So, it helps in analyzing the operational position of the company. The balance sheet gives the static information about the cash inflow and outflow. It gives the current financial position of the concern. From this, we can plan for financial resources. So, it gives current financial position. It helps in proper allocating the resources. By comparing the previous year and current year balance sheet, we get to know the difference or changes, whether the cash inflow and outflow is increasing or decreasing. From this, we can take the necessary steps to in proper allocation of available resources. It helps in increasing the efficiency in the organization. Next, to evaluate the financial withstanding of the company. That means financial statement is required for both the internal as well as external users to know the financial position of the company. So, it requires in order to know the strength and weakness of the organization. So, whether the cash inflow is increased, the reason for increases. If the cash inflow is decreases, the reason for decreases. So, it shows they can calculate, they can analyze the strength and weakness of the organization so that they can take the necessary steps. So, in improving their business, the fund flow statement helps to know the strength and weakness of the organization. So, it requires for both the internal as well as external. Internal and external users. Next, fund flow statement act as a future guide. In fund flow statement, we compare with the previous year information or previous year balance sheet. So by comparing the previous year and current year, we get to know the difference between the previous year and current year. So from this information, we can take the necessary steps. We can improve their efficiency in the further period or in the future period. So it acts as a guide how to improve, how to overcome from this problem. So it helps in, it acts as a guide. It acts as a guide in improving their efficiency. So this all about the objectives of fund flow statements. Mainly fund flow statement helps to know the difference between the previous year and current year balance sheet. It gives the financial position of the concern. So it is required for both the internal as well as the external to take the necessary steps, and it helps in analyzing the strength and weakness of the organization. Then it acts as a guide for the future. It acts as a future guide. Next, format of fund flow statement. While preparing the fund flow statement, we need to follow 3 steps. Under that first step, calculate the statement of changes in working capital. So first we need to find the changes in working capital. To find the changes in working capital, we need to consider the current assets and current liability. So in fund flow statement, we compare the previous year information and current year information. So previous year balance sheet and current year balance sheet. So now we are preparing fund flow statement for the year 2019. For the year 2019, we consider 2018 balance sheet as well as 2019 balance sheet. So 31st March 2018, 31st March 2019. So we are going to compare the 2018 and 19 information. So here, if the working capital is increased from the previous year compared to previous year, current assets and current liabilities increased means we are going to write in increase column. If it is decreased, we are going to write in decrease column. So here, first statement of changes in working capital. Under that, first one, we are going to write the current assets and current liability. So particulars, amount, changes in working capital, whether it is increased or decreased. So first, current year balance sheet and previous year balance sheet, then increase or decrease. First, we need to write the current assets. So current assets, we know current assets includes cash and bank balance, then inventories, trade receivables, then prepaid expenses. So if any current assets are available, so write all the current assets here. So write the current year information. So current year current assets. So present year total current assets as well as the previous year information. For example, current year cash and bank balance on 31st 2019 is 20,000 and 31st 2018 is 15,000. So write 20,000 and 15,000. Now compare 20,000 minus 15,000 is 5,000. So from the 2018 compare the 2019. So it is increased. 2018 the balance is 15,000. In 2019 the balance is 20,000. So it is increased. So write in the increase column 5,000. Next, inventories. Inventories in the 2019 2 lakh. In 2018 inventories were 1 lakh. So 2 lakh minus 1 lakh. So it is increased by 1 lakh rupees. So write 1 lakh in increase column. Then trade receivable. Trade receivable in this year 50,000 and 2018 60,000. So it is 50,000 minus 60,000 means 10,000. 10,000 is decreased. Right in the decreased column 10,000. Same way for the prepaid expenses. So compare the current year and previous year balance sheet information. So write the current year and previous year information. Compare 2-year balance sheet. Compare 2 balance sheet amount. Then write the whether it is increased or decreased. Then make a total of current year and previous year. Total increases and total decreases. So it is considered as A. total of A, total current assets. Next, in a similar way, do it for the current liability. So write all the current liabilities, current year and previous year. Compare current and previous year. Just write the increase or decreases. Then make a total of current liability, that is total liability, total current liability, that is B. So A, B, total current liability, current year and previous year, total increase and total decrease. Next, find the net working capital. Net working capital is equals to A minus B, current assets minus current liability. Current assets, total current assets and total current liability for the current year as well as for the previous year. Next, after finding the net working capital, we need to find the net increase or decrease in the working capital. That means here net working capital, we got 60,000 for the current year and 50,000 for the previous year. Now 60,000 minus 50,000. Now find the difference between 60,000 and 50,000, that is considered as net increase in working capital. If the current year net working capital is more than the previous year, then it is considered as increase in net working capital. If the current year net working capital is less than the previous year, we consider it as a decrease. So write in the increase column, increase in net working capital. So that's all about changes in working capital. So first we need to prepare changes in working capital. After that, step 2 is prepare a statement of funds from operation. So fund from operation. Step 1 is statement showing changes in working capital. Next, step 2, prepare the statement of funds from operation. For this, particular amount. First, current year profit or loss. So current year profit or loss, we get this information in the balance sheet. So profit or loss, consider it as A. Next, for this, we need to add depreciation. Then expenses written off, bad debts written off, proposed dividend and provision for income tax. So all this we need to add with the current year profit or loss. So add the depreciation and other expenses for the with the current year profit or loss. So it is considered as total B. Next, from this we need to deduct accrued interest on fixed deposits. So income, all this is expenses. For the current year profit, just add all the expenses. From this we need to deduct the incomes. Next, write the accrued interest on fixed assets. So this total of income, indirect income, we are going to consider it as a total C. Now we have total of A, total of B and total of C. Total of B means all this depreciation written off, bad debts written off, proposed dividend and provision for income tax. So this is total B. Current year profit or loss is total A, total B and total C. Next, funds from operation. To calculate the fund from operation, A plus B minus C. So A plus B minus C is equals to fund from operation. So after preparing the statement of fund from operation, next prepare the last step. Prepare the fund flow statement. So to prepare the fund flow statement, we require step 1 and step 2, that is changes in working capital, then fund from operation. So here statement of sources and application of funds. So this is a statement which shows the application and sources of funds. Then current year information. Here we'll write only the current year information. First, sources of fund. The sources from which you are going to collect the fund. So under that first one, funds generated from the operating activity. So write fund generated from the operating activity. Next, proceeds from issue of share capital. Fund can be collected from the issue of shares. So write the proceeds from issue of share capital. Then make a total sources of fund. Next, application of funds. So these sources of funds, from the sources of fund you collect the fund for the business purpose. From this fund you are going to invest or you are going to spend, you are going to use this fund for various purpose. So write the application of fund, usage of fund. Next, under that first one, purchase of fixed asset. So purchase of fixed assets. Next, increase in working capital, increase in working capital. So this all comes under applications of funds. Now make a total sources of fund and total of application of funds. So both the sources and application should be balanced. Total sources of funds and total of applications of funds should be balanced. So this is all about fund flow statement. This is the format of fund flow statement. First we need to prepare the statement of changes in working capital, statement of funds from operation, last step fund flow statement. Here we consider all the sources and applications of fund. So let us solve one problem. This is the question. From this information prepare the fund flow statement. So here we have the previous year liabilities and current year liabilities, as well as previous year balance sheet assets and current year assets. Here this is the information about the previous year and current year liabilities and assets. Here we have liabilities, share capital, previous year balance 300 and current year balance 500. Then reserves 175 previous year and 300 current year. Long-term loans 400 and 300. Next, current liabilities 200 and 250. Total of previous year 1075 and total of current year 1350. Then assets, previous year assets, fixed assets 700 and current year assets, fixed assets 850. Then previous year current assets 375, current year current assets 500. So total 1075 and 1350. So this is the information or given data. From this we need to calculate the fund flow statements. So first step is to calculate the statements of changes in working capital. So to prepare the changes in working capital we require current assets and current liability. So write statement of changes in working capital, particulars, amount that is previous year and current year. So first current assets. Current assets is previous year information 375, current liability 200. So here 375 and 200. This is previous year information. Previous year current assets is 375 and current liability is 200. Next, current year information. Current year asset is 500, liability is 250. Write 500 and 250. Now, find the difference. 375 minus 200. 375 minus 200 is 175. 175 is net working capital. Assets minus liability. So, A minus B. A minus B is net working capital. 375 minus 200 is 175. Next, 500 minus 250. So, 500 minus 250 is 250. So, 250 and 175 is net working capital. Here, now find the difference between the current net working capital. Find the difference between net working capital. 175 minus 250. Difference between previous year and current year net working capital. 175 minus 250. That is 75. So, this is previous year information and this is current year. So, from the previous year, current year is more. So, that is increased. So, net working capital is increased. So increase in working capital is 75. The increase in the working capital by 75 shows that organization has allocated more money in the working capital and hence it will reflect on the uses side of the fund flow statement. That means from the compared to previous year, the current year working capital is increased. That means the company invests some money for their operation. So that the company invest, they use fund for their operation. So it reflects on the uses side, that is application sides of the fund flow statement. So this increase reflects on the fund flow statement application side. So here, in order to calculate the statement of fund from operation, we don't have any information regarding depreciation, then proposed dividend, expenses written off, bad debts written off, proposed dividend, provision for income tax. We don't have any such information in this problem. So directly we can prepare the fund flow statement. So after first step, directly we can prepare the step 3, that is fund flow statement. So here fund flow statement. To prepare the fund flow statement, compare the previous year and current year balance sheet. Here share capital is 300 previous year, current year share capital is 500. So compared to previous year, current year share capital is increased. That means they issue share, they raise share capital. So they issue fresh shares. Fresh issue of shares is 200. Next, here fresh issue of share is 200. Next, reserves. Previous year reserves is 175 and current year reserves is 300. So, 175, 300. 300 minus 175 is 125. So, 125, the retained earnings. 125 is a retained earning. So, they increase the reserves to meet the future expenses or future uncertainty. So, this 125, it comes under sources of fund. It increases the reserve by 125 rupees. So, it comes under sources of fund, retained earnings 125. Next, long-term loan. Long-term loan is a liability the company has to pay in future. So, previous year liability, previous year long-term loan is 400, current year loan is 300. That means from the previous year, the current year loan comes down. That means they repay, they pay back the loan of rupees 100. 400 minus 300, that is 100 rupees. They pay back 100 rupees loan. So, it comes under uses. Repayment of loan 100. So, here changes in the liability, decrease in the liability comes under uses. This 100 comes under uses. This 2 comes under application. Next, current liabilities we consider while finding the changes in working capital. So, just ignore this. Next, fixed assets. Current assets also we consider, just ignore this. Then fixed assets. Previous year fixed assets is 700. Current year is 850. That means they purchase some more fixed assets. They invest on fixed assets. That means they use the funds to purchase or they invest on fixed assets. So, then it comes under uses. They invest funds on fixed assets. So, from the 700, it increased to 850. That means 150 rupees increases. So, it comes under purchase of fixed assets 150. Next, from the calculation of changes in working capital, we get increased in working capital. Increased in working capital means they use some money or they uses funds from their business in this year. Compared to previous year, they use more money in the current year. So, it comes under uses. So, always increase in working capital comes under uses or applications of fund. So, increase in working capital rupees 75. Now make a total sources and application or users. So now 325 and 325. So our fund flow statement balanced. This all about first problem. This is the question solution. Here we have not prepared fund from operation only because we don't have any such information related to fund from operation. That's why we have not prepared the fund from operation. If any information related to fund from operation like provision for taxation, expenses written off, bad debts written off or depreciation is available, so we can prepare the fund from operation. So this is all about today's session. Let us meet in the next session. Until then, keep watching. Thank you.